Bitcoin Treasury companies. Is ASST the next MicroStrategy? The rise of Bitcoin Treasury companies, public firms that prioritize Bitcoin accumulation as a core strategy, has created a new investment niche. Asset entities, or ASST, surged more than 1,300% after merging to become a Bitcoin Treasury firm, only to pull back sharply. Retail investors are now asking, is this a buying opportunity or just hype? Here's how to analyze ASST and similar companies. Why Bitcoin Treasury companies matter. Bitcoin Treasury companies treat Bitcoin as a strategic reserve asset. They aim to outperform Bitcoin itself by using tax efficiency, capital markets, and financial engineering. Key players include MicroStrategy, which holds over 568,000 Bitcoin at a cost basis of $39.4 billion. Asset entities now merged with Strive Asset Management, forming a $2 billion Bitcoin treasury firm. These companies appeal to investors seeking Bitcoin exposure without direct ownership, but they also come with unique risks. ASST, the new contender. ASST's merger with Strive made it the first publicly traded Bitcoin treasury firm on the Nasdaq. The stock surged more than 1,300% in 5 days, rising from 53 cents to $8.62. It has since pulled back as the hype cools. ASST's strategy includes Bitcoin for stock swaps, using tax-free equity exchanges for Bitcoin under IRS Section 351. It also uses reverse mergers to acquire cash-rich companies that can help fund Bitcoin purchases. The focus is on Bitcoin per share rather than traditional revenue. How to value Bitcoin treasury companies. 4 key metrics. First, Bitcoin yield. This measures Bitcoin growth per diluted share over time. For example, if ASST increases its Bitcoin holdings by 20% without issuing more shares, the Bitcoin yield is 20%. Second, the Bitcoin multiple. This compares the market value of the Bitcoin held to the amount of equity issued. A multiple over 1 means the company created more Bitcoin value than it diluted through issuing stock. Third, the Bitcoin rating. This compares Bitcoin holdings to liabilities. A rating over 1 means the company could cover all its debts with Bitcoin. ASST's rating is currently unclear. Fourth, Bitcoin net asset value, or NAV. This calculates Bitcoin value per share. For example, if ASST holds 10,000 Bitcoin priced at $65,000 each and has 10 million shares outstanding, the NAV per share would be $65. Assistant versus MicroStrategy. Key differences. MicroStrategy has a long track record with over 568,000 Bitcoin and more than 5 years of consistent accumulation. ASST is brand new with no public record. MicroStrategy's strategy is simple, buying Bitcoin using cash or debt. ASST relies on tax swaps and reverse mergers. ASST is also far more volatile, with dramatic price swings compared to the more stable movements of MicroStrategy. When to buy ASST? Three scenarios for retail investors. First, wait for consolidation. After a 1,300% rally, ASST needs time to stabilize. Look for support levels, perhaps between $4 and $5 if 8.62 was the peak, and watch for lower volatility. Second, focus on metrics like Bitcoin per share and Bitcoin yield instead of hype or headlines. Third, diversify. Don't allocate more than 5% of your portfolio to speculative Bitcoin stocks like ASST. How retail investors can assess risk in Bitcoin treasury companies. Bitcoin treasury companies, public firms holding Bitcoin as a strategic asset offer. Retail investors' exposure to crypto through equities. However, their unique risks require careful evaluation. Here's how to assess these risks effectively. 1. Bitcoin volatility exposure. Bitcoin's price swings directly impact these companies' balance sheets and stock valuations. Key metric: compare the company's Bitcoin holdings to its market cap. A high ratio, e.g. greater than 50%, means extreme BTC correlation. Example, if Bitcoin drops 30%, a company with 80% of its value tied to BTC could see shares plummet disproportionately. Mitigation, check if the company hedges BTC exposure or holds stablecoins for liquidity. 2. Management and strategic risks. Distraction from core business. Does the Bitcoin strategy align with the company's expertise? Red flag. A non-crypto firm suddenly pivoting to BTC acquisitions, e.g., GameStop's 2025 debt offering for BTC. 1. Financial health. Avoid companies using excessive debt or stock dilution to fund BTC buys. High debt/BTC ratios increase bankruptcy risk during crypto winters. 1.6. 3. Accounting and regulatory risks, mark-to-market volatility. Companies report BTC holdings at current prices, causing earnings swings. Look for consistent unrealized gains losses in filings 1.4. Regulatory uncertainty. IRS treatment, e.g. U.S. taxes BTC as property, EU's MICAI,